Let's get started with the markets, and the global financial landscape has faced a turbulent week as escalating geopolitical tensions and regional political shakeups rattled investor confidence. Let's start with the rupee. Now, Indian rupee breached the 96 per dollar mark for the first time ever. Intense pressure from surging crude plunged the currency down by nearly 2% in just 6 trading sessions. Compounded by the currency's slide, Indian stocks succumbed to late session selling. Both benchmarks closed in the red. Across the region, Asian stocks largely mirrored the cautious tone. South Korea's Kospi shot sharply from a new recent record high on Friday. From Japan to Hong Kong to Wall Street, stocks showed a sea of red. Political uncertainty drove sterling to a one-month low against the US dollar. Crude prices flared up significantly. Brent crude surged over 3% to trade back above $109 per barrel, and that was fueled by President Trump's indications that the West Asia conflict could continue. Safe haven gold, that failed to find its footing against a fiercely resurgent US dollar. Spot gold prices fell 1.4% as the greenback's breakout crushed broader precious metals momentum. And to understand more on the market's outlook, we are now being joined by Mithali Nikor, economist and founder of Nikor Associates. She's joining us live from New Delhi. Hi, Mithali. Thank you for joining me on the broadcast today. Let's start by talking about the Indian rupee. Now, that continues to weaken despite the RBI intervention. Now, when do you see the currency sort of stabilizing?
So I think the first thing we have to understand, and I've been studying this for a while now, it's, we use this term record highs and record lows. Very often when we are relating what is happening with any currency and, with any of these, trends. But the issue here is that the Indian rupee, yes, has depreciated by about 6 to 7% in this period. I mean, we started January 2026 at a level of approximately 90 INR to USD. Now we're at 96. And yes, this is a record low, but that's also because in comparison to other emerging markets, other emerging economies, the depreciation in the rupee has been larger. But that doesn't mean that other currencies haven't been depreciating. It's just that they've hit those record lows a few times before. The rupee hasn't, mainly because of India's good macroeconomic management in the past and even now. So I think this term of record highs and lows, it just misleads us a little bit, into thinking that the performance is actually terrible, but it's not. It's just that it's a new low, but that doesn't mean that, it has performed much worse than several other countries, because even some other, economies like Thailand have seen a 6% depreciation in their currency as well.
Right, so that's about the comparison with other currencies in the region. But Mithali, if we talk about Indian stocks, they are among the worst performing globally. What is your outlook for the rest of 2026? Could this downtrend continue, or could there, be some support?
So actually, there was a very interesting, anecdote that was shared by Uday Kotak recently, and I was studying a lot of that. What we are finding is that there are two phenomena that are really very interesting in the long-term development of the Indian stock markets and the Indian financial architecture. The first is that FIIs, that is foreign institutional investors, have really been very important actors to bring in a lot of foreign capital into India. Of course, FDI has also come in at record levels, and that continues to be the case. But FIIs have been, very important market shapers. And as soon as they hint a sense of, they get a hint of uncertainty, their immediate reaction is to have a flight of capital outside of, the financial markets. So I think with FIIs, being overinvested in India in a certain way, they were really looking for that quick return in 2025, as a lot of the other economies in the world were collapsing. This is what we actually saw in 2026. There was the war and a lot more uncertainty, and because India held a outrageously large proportion, almost 40-50% of FIIs had parked some capital in India. we felt like it was a much bigger flight of capital, but it was mainly because India was one of the only safe havens at that time. I do feel that the domestic investors who are really bringing up the SIPs, who are really putting up their savings into the Indian economy today and into the equity markets, will be the ones now in the next decade shaping the architecture of the Indian financial markets.
Okay, so that's how it's coming in on the Indian markets. But Mitali, apart from that, when we talk about some of these macro challenges, do you think the RBI will be forced to hike rates again in the next, few monetary policy meetings, one we have upcoming in June?
So I do feel that they may have to, because when we look at the wholesale price index and we look at the predictions on the consumer price index, those are rising up, those are inching up, and that's not a surprise because we know that global fuel prices, the increase in the commercial LPG prices, which has been the major reason why we've seen the WPI go up from a 4% in April to an 8% in May. It's nearly doubled. Is on the back of these rising fuel prices. We know that the WPI has a larger weight for fuel, and we've already seen the doubling there. But even in the consumer price index, fuel does make up a good, big proportion, almost 10% of the CPI. So I do think that that will happen to some extent. However, what I would caution is for the monetary policy authorities not to raise the interest too much, because it also raises the cost of borrowing for the government, and the government may have to come in with a fiscal support package given the distress that may come up in the economy if the war drags on, because we may start to see consumption declines and GDP reduction because of the consumption declines on the back of the rising fuel prices. So at the end of the day, the government would have to step in with a relief package.
Understood. Thank you, Mitali, for joining me. 3 key points here. Equity could shape the financial landscape over the next decade. That's the word coming in. And apart from that, RBI may have to hike. That's what you've suggested because of higher WPI, wholesale inflation, as well as retail inflation. However, if the rates become too high, the government may have to step in with a fiscal package. Those were the key inputs coming from Mitali. Thank you so much. On that note, I'll let you go.
Thank you.